If you were to define 4 rules of financial literacy, what would they be?
Okay, well, the first thing is the best time to start investing is, well, yesterday, but since we can't start yesterday, let's start today, right? The earlier, the better. The power of compound interest is definitely something you need to take advantage of. So that's the first rule, start early. Invest often. You can make that one rule or two, but there's really two investment strategies. It's buy and hold or dollar cost average, understanding getting your money in early and then continuing to invest as frequently as possible. And it really doesn't matter the amount, just start investing. I would say time in the market over timing the market. A lot of people want to try to gamble with their investment accounts. Just understanding that just having a plan in place and sticking to the plan will help you get there. Honestly, the last one is you don't have to understand every nuance of financial services. What you have to do is you have to have a good partner and an advisor who will help you understand the decisions you're making in the moment and then continually be there to remind you.
I'm Garrett Wong, and this is the Investing to Win podcast. How do you define success, and what does winning look like for you? Jason, thanks for coming on the podcast.
Yeah, thanks for having me, Garrett.
Yeah, no, I like to go through maybe a little bit of an intro. We're going to be talking about finances, and I think it's very timely, this interview, especially what's going on right now in the political climate. Not that we're going to touch politics. I don't like to do that. But why don't you tell the audience a little bit about your background, and then we'll kind of dig a little bit deeper.
Yeah, so I've been in the property and casualty insurance space for 23 years. In 2019, I met my now business partner, Sean, who was a financial advisor out of Calgary. He sort of like opened my eyes to some of the really cool things that can be done through the insurance side of financial services. So I really felt like it made sense to kind of dig into that and partner and try to bring that to people. I think there's a massive financial education or financial literacy issue in Canada. And so we decided to try to get some exposure and get it out there to the people. And yeah, so we've been doing this now since 2021. A company called Spectre Financial here in Windsor, Ontario, Canada. Just a small firm, but growing. And yeah, that's really who we are.
Okay, no, excellent. Why don't we dig back a little bit into your personal background? Like, how did you get into finances, or even rewind? Like, I love origin stories, maybe because I'm a Marvel fan.
Sure.
But tell me what happened out of high school and how you kind of the next I don't want to say 10, 20, 30 years because I don't want to date you, but you've got some gray hair and so
I
do
do,
I.
yeah.
So,
What's left of it, yeah. Fair enough. So yeah, I think I'll go back a little further. So my mom was 18 when she had me. Had graduated high school, but no formal post-secondary education. She worked very, very hard to raise me as a single mom for many years. And we, you know, it wouldn't be unfair to say we lived sort of probably around the poverty line or a little below, to be honest, most of my life. And, my mom was a very, very hard worker. And so um, I kind of, I think, adopted that mindset that I was going to work hard. But I also recognized that she didn't have sort of the access to the education and the financial literacy that, obviously with the internet and, advances in technology became a lot more available to people. So I got into sales right out of high school, really. I worked for another company for a little while, but did some drafting there, and it wasn't really my thing. I really wanted to be in sales, and so I got into insurance, property and casualty insurance originally, and I did very, very well there. Um, but if I'm being honest, Garrett, I was a good spender. I wasn't really a good saver. I didn't.
guilty. I'm right with you.
I made a lot of money in my career, but I spent every nickel. I didn't have a family, so in 2018 I met my now wife, and we ended up um, getting pregnant with our first child. And something just clicked for me that like I had to start doing things a little differently now that I had a family to support. And even though I was starting late in life, I knew there was ways that I could do this because I was making a lot of money at the time. Um, and I just happened to meet a guy at a networking event. He was a young guy. Um, I thought I'd throw him a bone and just like sit down with him and see what would come of it. And he blew my mind. So after showing me a few financial concepts, we decided to move forward with a plan. And uh, between 2019 and 2020, 21, I guess, into COVID, um, I was looking to expand, and I was working for an insurance brokerage here in southwestern Ontario. I was doing very well, but I wanted more. I wanted to either buy in or start my own brokerage or do something. And the stars just kind of all aligned. A few things that I thought were going to be my future didn't work out, and um, we ended up getting into business together. And so we launched. We incorporated in November of 2021. We launched in March of 2022. Um, and we haven't looked back. Originally, I was just going to help him build the business. I wasn't actually going to sell financial services because I already had a lucrative career in property and casualty. But we grew so fast that, and we couldn't really hire or train salespeople quick enough. So I ended up getting licensed. I think that was August of 2022. And, since then it's been wonderful. Busy, it's the entrepreneurial life, sometimes 12, 14, 16-hour days, but um, it's been very lucrative. And I think we're helping a lot of people. I think that's, for me, one of the biggest wins in all of this was, I believe I can sell pretty much anything, but when I was selling property and casualty insurance, I don't feel like I was ever changing anybody's life. Maybe I saved them some money or provided a better service, but it wasn't life changing. But what we're doing now for people and actually providing some financial literacy and education and, really helping people with their financial plans, it's been pretty, it's wonderful. Like, we've really changed a lot of people's lives.
Yeah, no, I'm all about big purpose, and I think you're alluding to that.
Mhm.
Speak to me a little bit about that. I mean, that kind of light bulb moment. I mean, I'm a spender.
Mhm.
I'd like to say I was a spender, but my wife would
Still,
say, "No, you're still a
still,
spender."
me too. Yeah.
But running up credit cards, refinancing the house to pay it off because some of those, 90% of it were renovations, but it's just not being fiscally responsible. I tend to chase shiny objects. What was your
Mhm.
your light bulb moment in terms of that bigger purpose and trying to help other families realize this?
Yeah, so I think there was 2 in my life. The first one was the realization that I had to do things differently for myself because I had a family to support now with, 3 kids here already, and, just I had to do things differently. Um, and then the second was really with when I so Gary, when I first started this business with my partner, Sean, he had 15 years in financial services. He was very good at what he did. He has a pretty unique way of illustrating more advanced financial concepts in ways people can understand. And so what we did is really I would introduce him to people I knew, people in my network, maybe clients of mine, and I would sit in the meetings and we'd sit around the boardroom table and I was watching this go on and I saw their light bulbs going off. And I recognized that, we were having a massive impact on these people's lives, uh, which honestly was something that, for me, uh, I've been in sales 20, well, when we started, probably 19 or 20 years already. And I never really had that experience at the boardroom table where, somebody would get visibly emotional. We've even had people break down in tears. And so, having sold property and casualty insurance, certainly not being life changing. I mean, I've had a couple of situations where people have, lost a house in a fire or something like that, where it is a little bit emotional and you do what you can to support them. But this was different. I mean, we've had, grandmothers break down in tears because, they were able to pay off their mortgage, and they were able to provide for their child and grandchildren, um, where they weren't sure that they were going to be able to, right? Because I think for most people, they just don't really understand how the plan will see its way through. And by just shedding some light on that and showing them the way that works, I think, letting them have a peek behind the curtain to see what can be done and how their life's going to play out. If obviously we make some assumptions, but um, yeah, the emotional side of that, sitting with people who just, you know, they aren't sure if they can retire, if they're gonna be able to, outlive their money, leave a legacy for their children, grandchildren, whatever. So that's been kind of the turning point for me. I think the big revelation was that, we can affect some really massive change on people's lives and still make a lot of money doing it. And it's a real good win-win scenario.
Yeah, I mean, to me, my light bulb moment is, or I guess the tragedy for me is because I'm in real estate and I like
Mhm.
teaching people how easy it is to get their first door,
Mhm.
but then obviously supporting them through the management of it, but really scaling that because when somebody doesn't know what they're doing, and in my case, somebody puts a bad tenant in place, they trash it. And then that person who has now spent 5 years of their life and their life savings, they have two or three properties, they're on their way. They're like, screw it, I'm done. I'm selling. This is crazy. I'm going back into whatever. That is a tragedy because I can see their path. And I think you guys are doing the same thing. I just want to back up just a second. So you mentioned property and casualty insurance a few times. What exactly is that?
Yeah, so whether we're talking about personalized, whether it's your home and auto insurance or commercial lines, business insurance, I specialized in long haul trucking fleets. So I did some larger, more complex commercial cases as well, but most of my customers, and I still have them to this day, are long haul trucking fleets. Um, but that's yeah, so that's really my 23 years of my life has been in that space. I've only been doing financial services, only licensed as an advisor in financial services for a couple of years. I think, I'm a quick study, and I did have the benefit of seeing what my partner Sean had been doing for about 3 years before I decided to jump in. So I had a bit of a head start on the learning curve. But we pride ourselves on big targets and helping a lot of people, and so we actually I'm actually very proud of this. I was able to achieve uh, a member of $1 Million Roundtable my first 2 years in the business. I'm hoping to get to quarter of the table this year, which for advisors is a pretty big milestone. Um, while at the same time running my other business, so um, it's been busy.
Yeah, that's the life as a serial entrepreneur. I mean, I've got four businesses and counting, and sometimes you wake up and go, why am I doing this? But then the energy and the excitement takes over.
Yeah.
You mentioned the young Sean. It doesn't sound that young with 15 years experience. Tell me about that dynamic. And because I've mentored people, and I think, like, I don't know how old you are. I'm 53,
Yeah.
but
Yeah, I'm
um,
45.
pardon?
I'm 45.
45. Okay. So a little bit there, but still, I mean, that age gap, you automatically think that you're mentoring somebody, and then the light bulb goes off because sometimes a different generation thinks differently.
Mhm.
I make myself sound so old by saying that, but I think we have to listen and learn from others. Tell me about what you learned from Sean and how he's doing things that really opened your eyes.
Yeah, so Garrett, when I met Sean, he was a young man, probably, oh geez, I think he's 34 now, 35. So we've got about 10 years difference, 10 or 11 years difference between us as well. Um, and I did. I thought I was just throwing him a bone, right? He asked me to go for lunch and teach him. He had transplanted, here from Calgary, didn't really know anybody. Had kind of come in at the worst possible time. Had just got his feet wet, and then COVID hit. And you know, but coming out of that, I saw so much. Here's the thing: I really believe in the Pareto principle. I think it affects everything we do, and the 80-20 rule. If you take 100 advisors and put them in a room, we can weed out pretty quick the 80 that aren't very good at their job. And then when you look at the 20, I think you need to apply that principle again because not everybody can actually teach, even if they understand it and they know what they're doing and they're good at it. Mm, the biggest key, especially when you're dealing with a subject that people don't know well, uh, and financial literacy is one of those things. I think if you can't explain it in a very I don't want to say dumbed down, but like a user friendly, easy to follow method, you'll lose people. And if they don't understand it, they can't make a good decision. And so with Sean, he was very, very good at asking a lot of questions, helping people come to understand it through that sales process that he used. And he used a lot of these little, we call them napkin presentations, where they're 30-second to 5 minute presentation, but where he sketches and talks and explains as he goes. And most people are visual learners, so when you combine, I'm not just preaching to you, I'm actually demonstrating it and illustrating it at the same time. It becomes easy for people to digest and understand. And his closing ratio is through the roof. And when I realized that that's really what separated him from most of the other advisors that I've ever met, was, his ability to teach you something in a very, very complex concept in a very simple, easy to understand way, and that he had it systematized, which was key. I thought it would be a no brainer to partner. And looking at his history as well, he came from a place where it was truly okay to just be average, and not really push yourself. And he'll talk about this as well when he says things like, I close a big deal, I'd make $30,000 or $40,000 commission, and I take the rest of the month off and go golfing. And I came from a world, well, my mo was really, if you're winning, you keep going, and when you hit a wall, that's maybe when you take a break and reset and refocus and figure out why you've missed something. So when we got together, he'd worked as an independent with a firm that never really pushed him, and I kind of raised the bar there. And so he'll tell you the story. His best year ever to that point was about $85,000, which, listen, as a financial advisor, that's actually above average, believe it or not. But the reality is it's still not very good. And so in our first 10 months, he did $427,000 in revenue, because he had the ability. He just wasn't driven enough. So that first 10 months, I basically booked appointments, and I just sat him in the boardroom and said, okay, go sell. And he did. And so it was kind of a fun little experiment with him. But I learned a lot watching him because, you could tell I like to talk. And he doesn't. He asks questions and
Oh,
listens.
interesting. Okay.
And we have
Yeah.
very, very, very complementary, but different sales styles. And they both work. We both hit phenomenal numbers every year. But at the end of the day, I know when there's somebody that I'm not going to resonate well with, and I'll bring Sean in, and he does the same with me. And it's we work really, really well together. A lot of times when you have high performers, egos get involved in things like this, but we have a much broader view of the big picture and where we're going. And the individual wins don't really matter, as long as we get the deal done and we help people. That's all that matters.
No, absolutely. What do you feel that if I were to interview him,
Mhm.
he would say that you bring to the table?
Yeah, I think he would tell you basically the opposite story, that I don't ask enough questions, that I don't listen enough. And it's not that I don't listen. I read cues. I study facial expressions and body gestures, and I know when I lock on to something that has piqued your interest most often, and I know when to hammer down on something and when to let something slide. And I also have, he does more volume work. I do less volume, but bigger cases. So when it comes to like large corporate solutions and things like that, that's sort of my wheelhouse. So, um, yeah, I think I'm a real driver type personality, and I will steamroll people if I'm not careful, and um, you know, m- dominate a conversation, which is not ideal sometimes. But um, I think that I'm a quick learner. I do read people well, and so I think that some of those skill sets allow me to close at a high volume as well. Um, but I think the biggest thing is that, like, I think we just both really want to help people. At the end of the day, that's what we have in common, and so it doesn't matter how we get there. Um, I'm quick to admit when I'm wrong, and learn from it. Um, and so I think that's been very helpful for us.
Yeah, I mean, I've had some business partners and in the past, and I mean, I don't have any more now. And I think if I'm being honest about it, maybe back then I blame their side of the relationship, but it really is a two-way street. You have to listen, you have to learn, you have to be open.
Mhm.
You use traditional sales terms here, Jason. Sales, closing, that type of thing.
Mhm.
And I don't want the audience to misconstrue that because
That's a function
that's
of the
kind of
business.
it's a function of the
Yeah,
business. It's kind of like a scorecard, right?
it is.
But really,
Yeah.
you've underlined it and emphasized it. It's about helping people, and the more that you can convince somebody through, I mean, you can call it a closing, but to me, a closing is a successful aha moment with your client, with your prospect, with your lead, because they finally get what you're trying to tell them
Mhm.
because you're so passionate at
Yeah.
helping them. Would you agree with that?
100%. I think in our mission statement, we talk about, you know, uh, providing financial education for the masses, leveling the playing field really, because honestly, the people who need what we offer most are the people who have the least access to it. And so, yeah, it really is about making sure the client is uh, coming along on this educational journey, on this process where they're understanding what their needs are and what the solutions are that are available to them and making choices. Um, yeah, I don't ever high pressure sell anybody. I often will spend 4, 5, 6 hours just in the preliminary process trying to understand what people's goals are, where they're coming from, and where they want to go, and what might work for them. And then when we come back with a plan, I mean, oftentimes there's several options, and I'll steer them towards what I think is best, but in the back of my mind, I've already built a relationship and I understand what their buying motives are gonna be and what their goals are and what's gonna align well. And so usually what happens, the hardest part for us is really getting people to open up. I find that a lot of times when you talk about financial services, people are afraid of, being embarrassed, not sure where they stack up, not knowing enough about the options. And so once you get people to the table and they start opening up and you start showing them some different possibilities, and that's really what we do. We start with a few pieces, some breadcrumbs, like these are some things that you probably didn't know were possible. And we try to give enough value that they want to take the next step and give us their information and see what a plan looks like. And once they do that, um, our closing ratio is extremely high because it's a consultative, educational approach, and we work with the client to find a solution that works for them. And we're good at that. So like there's a lot of different options, but finding the one that will appeal to the customer and actually help them get what they want out of this meeting is the key.
No, I love that. Again, because I'm in property management, that's sort of the main business, and closing to us means signing an investor up to manage their asset for a certain amount of time.
Mhm,
And I've now learned, I would say in the last year, because I've really taken, the last 12 months really seriously in my own education in that fact finding,
mhm.
to your point, 3, 4, 5 hours of fact finding and really finding out what the client wants. And it could be over 1, 2, or 3 meetings. That goes against every sales course that you would ever go to.
Always
And
be
for
closing,
me,
right?
but I mean, really, I
Yeah.
think it's about trying to find value, create relationships, and to be able to have lifetime clients.
Mhm.
Now, if you high pressure somebody into selling some kind of insurance product or whatever it's going to be, that's great. You make the money now, but you're going to make a lot more. I mean, if that is your purpose, it's certainly not mine or yours. But if you were in it for the money, you'd find a lot more value in having that long-term relationship, having somebody for 5, 10, 15 years, seeing them through to retirement. Like, how satisfying is that? And yet they're buying smaller pieces from you the whole way, right? I mean, it's just better.
Yeah, absolutely. I feel like, you know, we had we've had some success bringing certain uh sales agents in and to your point, we talk about things like persistence, right? It's great to hit great sales numbers, but if it doesn't stick, if it falls off the books in 3 months or 6 months, what was the point, really? Everybody's wasted some time and money. Um, so finding the right solution that is a good long-term solution and understanding that especially with a financial plan, it's never set in stone, right? So much changes so often. I found, we've done a couple of acquisitions, and I found, I think we're at 4 now. I found as we go, I find more and more advisors, unfortunately, aren't doing a really good job in keeping in touch with their clients and doing proper reviews and understanding what's changing in their lives. And, I think this is highlighted with me even, I was a high income earner for a long, long time, and I had 2 different advisors, and neither one of them actually, I mean, both of them sold me some life insurance, but neither one of them actually took the time to sit down and explain my options in terms of investment strategy or, even, the use of permanent insurance versus term. They just sold me the cheapest product. And listen, I understand it. It's an easier sell. We can probably have a 20-minute conversation. You can get enough information out of me to sell me a cheap term policy. But what they missed is that I would have been very interested in learning more. I didn't know what I didn't know at the time, and they probably could have got a much bigger sale with me and probably helped me a lot more than they did. And we could have had a really good long-term relationship. Instead, they sold me a one-time term policy that, to be honest with you, was kind of garbage. It covered a need, but was not big enough really. And just having that conversation, getting to know people and understanding what motivates them, what their interests are, what their goals are. Some people, want to leave a massive legacy to their kids. Some people don't, right? But that's a big differentiator when I'm building a plan, right? If I don't understand what type of person you are when I present the plan, I've got a 50-50 shot whether we're going to align on this or not. But if I take the time and invest properly in the conversation and I understand what makes you tick, why you get out of bed in the morning, I'm more likely to be able to put a plan in front of you that makes a lot of sense. And it's probably going to be bigger than just trying to sell you something quick and cheap.
Yeah, I would agree with that. I think, and I applaud you guys for, I don't want to say that I'm insulting any kind of financial advisor
Mhm.
out there, but it's to go after the high net worth people is very easy because obviously they have money they can spend. If you're playing in your space, it's difficult because people don't have a lot of money, so therefore the products they're buying are smaller. But if for anybody listening to this that's in financial services, I think the biggest lesson that you and Sean are trying to say here, biggest takeaway is play that long game,
Mhm.
really help somebody out, and now you have a lifetime client. And honestly, whether you have a 2-year high net worth individual that buys a few things from you versus a 20-year client, what hits you here better, and you help that person, and ultimately you're making the same amount of money anyways.
Yeah, honestly, Garrett, I think that it's I mean, there are definitely firms out there that will tell you they have an ideal client or a minimum, investable asset requirement. We don't. We have 19, 20-year-old kids fresh out of university or college that are just looking to get on the right track. And I mean, listen, we all have to make business decisions at some point. I can only spend so much time, especially if I've got somebody who, let's say, wants to just open a TFSA, and they're going to, pack $100 a month into this TFSA. I'm not going to make any money on this, but I'll do the right thing. And this is why we're trying to build our firm in a way that we'll have some junior advisors who can help that young client and grow with them, right? Um, but at the same time, we do have some high end clients. I mean, some high net worth clients that do pay the bills, and so we can we there's enough money on those deals to justify doing. It's the concept of a lawyer doing some pro bono work, right? You get rewarded on one end for some of the good work you do, and you give back where you can. And so uh, you know listen, we all have to make business decisions and value our time and all of those things, but at the end of the day, you just never know, right? And I'll give you an example. We had a young woman come in. It was actually the first month we were open, and she had met my wife. Our kids had a gymnastics class together, and she asked my wife if I would offer some advice to her. She didn't have necessarily any money or anything, but I said, yeah, listen, come on in, let's talk. And so we did, and we offered her some advice. And we ended up doing a small insurance policy for her. But within 10 minutes of that first meeting, she called us back and asked if she could book her mom to come see us. And, of course, obviously we did the right thing. She felt good about it and she wanted to refer her mom here. And when her mom came in, I found out that her husband had just passed away a few months earlier and she was sitting on a big amount of money that she didn't know what to do with. And, so giving 45 minutes to a young woman who honestly would never get the time at a lot of firms, and just treating her with respect and dignity led to a pretty significant deal. I mean, we did a large insurance case and, you know, moved a substantial investment account as well, um, because we did the right thing, right? I could have spent all the ad money I wanted and I could have made all the calls I wanted. I probably would have never connected with this woman. Um, so, you know, y- you just have to sometimes just do the right thing and let the money take care of itself.
Yeah, no, I couldn't agree more. You guys have identified sort of a gap in financial literacy and education.
Huge.
Why do you think that is, and how are you guys closing that gap?
Yeah. So truthfully, um, I think a little bit of it is sort of by design. Um, you know, it's a little bit unfortunate, but I think you know, there's a whole bunch of sayings, right? I mean, but it's the shiny thing conversation, right? The middle class buys things, right? And it keeps us poor. And there's a lot of good marketing out there and a lot of good products, and we all want to, compare ourselves to the Joneses and all that good stuff. But discipline is difficult. Um, just finding credible information. There's a lot of bad information out there, frankly. There's a lot of really, really bad information, and people, unfortunately, think they're doing the right thing, and they find out, way too late that man, I should have done something different. So for us, you know, what we want to do is just talk to as many people as we can. Our consultations are always free. We do not ever charge fees. We work strictly on commission. So I mean, that'll tell you if you understand the business model. I'm going to invest a whole bunch of time up front, hoping to earn a relationship with you. I'm going to show you a bunch of options and talk you through all of them and educate you. And if we decide that we're going to move forward with something, I might get paid, and I do get paid well for that. But I only get to keep the money if it sticks. And if you turn around and you have buyer's remorse and you don't feel good about the interaction and you end up canceling, the policy or moving the money or whatever we end up doing, I've wasted all that time and energy and effort. So I'm really invested in doing the right things for the people, doing the things that align and understanding that there's a lot of options. So helping people wade through all those options and get to the best solution, or at least the best solution for them. Um, and that's been an interesting thing too for me. Coming from the insurance world, I love insurance. Given insurance or investment options, I will take insurance 9 times out of 10. But not everybody's like that, right? A lot of people are skeptical of insurance companies and the industry itself, and so I have to put my own biases aside and understand what motivates you, and really understand from your perspective what a good deal looks like. Um,
Yeah, I was going to ask, when on the concept of financial literacy, I'm again, this is anecdotal, but just speaking to people, obviously I'm in the investment space, but in real estate,
Yep.
what steps do you feel or advice you could give to communities, families who are trying to just get smarter about finance and even long term, what are we going to do in 20, 30 years? How
Mhm.
can somebody get started?
Yeah, so that's a great question. So for me, the first thing I would say is like, and I don't want to slam anybody, but when you think about where most Canadians go for financial advice, it's typically the bank. And I think there's a number of reasons why that happens. Whether it's a legacy issue, that's where my parents went, or I just don't know where else to go, or I think financial advisors might be expensive. I don't know who to trust. There's a lot of factors, right? So, but I think you should interview several advisors. I don't think you should really, one of the questions that we typically ask our clients or our prospects is, do you really think it's in the bank's best interest to help you get out of debt and retire? And most people right away they're like, well, no, because every time I go to the bank, they offer me, another credit card or a line of credit. They want to sell me a mortgage, and that's true. Listen, there's a tool for every job, and the bank's job or the the bank is really used for providing debt services, like mortgages, lines of credit, credit cards. You can pay your bills. We can transact e-commerce, but they're not really in the business of financial planning. I mean, the private wealth side for sure is, but good luck getting access to them unless you have a $500,000 or $1 million in some cases. And so finding a good advisor, again, remember the 80-20 rule. Ask a lot of questions, interview a number of advisors. I would suggest at least, 3 or 4, before you make any decisions. And so a couple things. It's never too early to start saving. There's no wrong way to do it. There's more efficient ways to do it, for sure, especially when you look at taxation. Um, but I think it's important to understand, especially the sooner you start, the better off you'll be regardless. Even if you did it wrong, you could do it the least efficient way. You'll still be better off by starting early. And then the second thing is honestly understanding the long-term tax implications of your investment choices, right? And that's the biggest thing. Like a lot of people don't even know about, capital gains rules or how an RSP is actually taxed. A lot of people think that their tax-free savings account doesn't grow because some teller at the branch level set it up for them with no investment instructions. And so just getting some of that information, understanding that um, there's a lot of different ways to do things, um, and finding what's comfortable for you is the key. Because honestly, there's no real way, no wrong way to save. Uh, it's just how efficient can you be at it. So um, we do see some people who are very successful, self-directing, which is okay too. Um, as long as you don't get extremely emotional about ups and downs, that's fine. Um, but I think for most people, they just need a good advisor who's got a level head, who can shed some light on different options. One of the things is you should always feel like you have options. If you have an advisor who's sort of preaching to you, this is how you have to do it. That's probably not a good sign. Um, there's always options, and you should always feel comfortable with the choices you're making.
Yeah, no, I'm an entrepreneur. My
Mhm.
wife's a nurse, so she'll have a partial pension. Although she left several times to do some remote nursing
Yeah.
up north in Churchill, actually,
Sure.
and also in Europe early in her career. And so I the feeling that I have is that younger people. So I have a 20 and a 22-year-old at home, but let's
Mhm.
just take somebody in your mid 20s.
Mhm.
I feel that with everything that's been happening in the last few years with COVID, now we're talking about tariffs, everything is going up. Our dollar's being devalued. Do you find there's more of just a futility in thinking about financial future and even that concept of retirement for that generation?
Um, so so personally, I don't have a lot of mid-20 year old clients. My clients typically.
Even 30s, even
Um,
30s though.
but what I'll say is, I think across the spectrum, I've got 50-year-olds who aren't sure if they can retire, and so it's a real concern when you look at the way inflation's been running, the way the dollar's been devalued. That those are all massive concerns, and so I think it's even more reason why proper planning needs to be done. A lot of people think, and we have to overcome this, this objection or this feeling. But a lot of people think that we're just here to push a product. If you come and see an advisor, they're going to sell me on investing in my RSP or my TFSA, or they're going to sell me an insurance policy. And really, some advisors are like that. Again, 80-20 rule. But if you have a good advisor, their focus should be on planning, right? And so, when you look at, the banks offering a 4 or 4.5% GIC, or a year ago when they were offering 5+% in a GIC, you have to think like, am I even keeping pace with inflation? Right? Because I think because of a lack of education, uh, risk tolerance, and then some people have high risk tolerance, some people don't. But when you factor in the fact that I'm not going to earn enough return to keep pace with inflation, that's a risk, right? And so people who are afraid of losing money don't understand that by not taking enough risk in their portfolio, you lose buying power, and therefore you may not actually be able to retire because you didn't take enough risk. And so, like, these are depending on where you're at in your savings plan, where you're at in your life, and what your retirement goals are. These are all things that have to get factored in. So, a lot of times when you're in real estate, like a lot of these people have a lot of equity in their home. The bank is you know graciously offering them 0% return on all of their equity. It's you have to understand that that is a risk. If I want to tie all my equity up in the home and not have a mortgage payment or have a lower mortgage payment, yeah, that might make sense. In a high interest environment, it might make more sense. But I would say that, people who were afraid of, say, 6 or 7% interest rates in the last couple of years, um, could have easily, without taking a lot of risk, achieved 20, 25, 30% returns in the market. And, we we battle with this emotional roller coaster. And my job as an advisor, I think, is to sort of like steady that fear, provide some reassurance, and show you that, listen, if the bank's willing to give you 4.5%, there's probably a pretty strong likelihood that they're going to go out and make, a heck of a lot more than that. And so why don't I just show you how to do that instead? And, we build a portfolio that takes a lot of the risk out of investing. We put a buffer between you and your money so that there's a bit of an emotional um, uh, buffer for us. And, like when we, we're going back to when the Russian Ukraine war broke out. And I remember that was a Saturday back in 2021, and we came in and we had our Monday morning sales meeting with the staff. And the first thing we did is, hey, what's our message to our clients? Because we know we're going to get calls. So what are we going to tell them? And the answer, unanimously was time in the market is better than trying to time the market. And stay invested. And honestly, at this point, be prepared, because if the market starts to move downward, that's a buying opportunity. The market's going on sale. And it's so counterintuitive to the way people would typically react, right? Oh, I'm losing money. I need to sell and get out now. Well, that's the best time to buy, right? And so, we use the analogy, like, if you like to buy shoes, if your favorite pair of shoes went on sale, would you buy one or would you even buy two, maybe? But you wouldn't hesitate to buy. And when the market's on sale, like, listen, the market will be up and down forever. I'd rather buy it when it's cheap than when it's high. And educating the clients, and helping them take the emotion out of that game, helping them understand their own risk tolerance, and identifying all of the risks, the inflation risk, the liquidity risk that uh, people aren't really necessarily always aware of. I think that's my job as an advisor. I think that all advisors should be doing that. Um, it will make some clients uncomfortable, and I'm not going to say I don't have some clients who still locked up money anyways, but they at least did so having the option and the education available to them. So, yeah.
Yeah. Okay. I want you to try to distill down, and I kind of prepped you with this question because I really like to, for my audience, to have like more of a list, right?
Mhm.
If you were to define four, I don't know, four rules of financial literacy, what would they be?
Hmm. Yeah. So, okay. Well, the first thing is, the best time to start investing is well, yesterday. But since we can't start yesterday, let's start today, right? The earlier the better. The power of compound interest is uh, definitely something you need to take advantage of. So that's the first rule. Start early. Invest often. You can make that one rule or two, but there's really two investment strategies. It's buy and hold or dollar cost average. A blend of the two strategies really is what's going to make you successful. And so, understanding getting your money in early and then continuing to invest as frequently as possible. And it really doesn't matter the amount, just start investing. Um, I would say time in the market over timing the market. A lot of people want to try to gamble with their investment accounts. If you're a successful day trader, go get it. But outside of that, Listen, the market's always, over the last 20 years, I don't think it's ever been down. So just understanding that when we're talking about long-term retirement goals, um, just having a plan in place and sticking to the plan will help you get there. Um, and I think honestly, the last one is just really just to you don't have to understand every nuance of financial services. What you have to do is you have to have a good partner and an advisor who will help you to understand the decisions you're making in the moment and then continually be there to remind you. And an example of this is we have one customer, it's one of Sean's customers, and literally every year on the review, he has to start from scratch. Um, but they go through the whole plan again, and he asks all his questions again, and he feels very comfortable by the end of that, 1 hour or whatever it is, and he can be at peace, and then for the rest of the year, he's good, right? And so just having a professional that is willing to take the time to teach you, as a consumer, you don't do this every day. But you have to be comfortable in the decision, and your professional should be willing to spend the time with you to make sure that you understand it at least well enough in the moment to make a decision. You don't have to remember it for 12 months, but you have to remember it long enough to make an educated decision and be comfortable with it. Um, I had a woman, an old elderly woman. We gave her some advice. It worked out really well, and she came back and she said, "Okay, I'll do whatever you tell me." And I said, "Well, do you understand the plan?" And she said, "Well, no, but I know you're going to tell me the truth. It's fine. Just do it." And I said, "No, no, I have to take the time to make sure you understand, at least for this hour, that you're clear, crystal clear on the decisions you're making and why you're making them. And we're gonna summarize it, and you're gonna get the meeting notes. And if you ever want to look back, you can. But if you ever want to call me, you can." And I think that's really the biggest thing. So yeah. So just to recap, I know I talk a lot sometimes, but just start early, invest often, time in the market over timing the market, and use a professional that really will take the time to help you with your plan.
Yeah, I think that last point is critical. I'll use maybe a gross analogy, but you wouldn't do surgery on yourself just because you can read a book about it. You can watch YouTube or Grey's Anatomy or something, and you're going to remove your own appendix. I mean, even if you like it, it's ridiculous, right?
Even
And
as a
yet we're
kid, you would.
talking about your life here, right? And you're throwing around terms dollar cost averaging, inflation, buying in the market, out of the market,
Yep.
day trading. Like
Yep.
I consider myself somewhat, educated, savvy. Like this is kind of my space. And
You do.
even I wouldn't want to invest in anything except what I know, which is my livelihood, which is real estate.
Right.
And even then, I still have advisors. So
Right.
I think those four rules are really key.
Yeah.
Um, you know, couple more minutes here before we wrap up the podcast. Mindset.
Mhm.
We've both been through some trying times. I'm sure you've alluded to some as entrepreneurs.
Yep.
But what can you tell the audience about mindset? Because really, for somebody who's struggling financially, I think mindset is probably the biggest thing that's going to get them out of it because things are tough. You're going to have to sacrifice. There's, whether it's spending habits or working a second job to get, rid of that credit card. What would you say about mindset and how important it is?
Yeah. So Garrett, I'll tell you, listen, growing up, I mentioned earlier with my mom, single mom, 18 years old, I came from virtually nothing. One of the things I'll say is that I've seen people struggle with depression and anxiety. I've seen people struggle with finances. Um, there's always an option, right? We get to make choices, and if you believe that, then there's really no limit to what you can do. Um, in many cases, sometimes there's limitations, but understanding that when you get your mind wrapped around um, very very clearly defined goals, and that you build a plan and you stick to the plan, things can happen. I mean, most of us have seen, the analogies or the reels on social media where, $100 a month from, age 20 to whatever will be. I mean, like there's ways, right? And even if you're later in life and you're just starting out, there's still ways. Um, you know, maybe it means you have to work a little harder. Maybe you have to invest in yourself and get some more education. I mean, one of the things I was not, I was not a big student. I wasn't a great student in school. I had a hard time um, sitting in lectures at university and 3 hours listening to somebody babble on about something that I had no interest in, truly. And so we have to find what works for us. My daughters, we decided to homeschool. I you know you make choices. You do whatever you do because I found for me the school system didn't work. Now we might turn it around and find out that homeschooling doesn't work for our kids. But I think at the end of the day, um, we're capable of so much more than we give ourselves credit for. Um, Having that commitment to I'm going to improve my situation. I don't know how I'm going to do it, right? And frankly, like it's going to require some sacrifice. I don't love reading. I don't have a lot of time to read either, so I do audiobooks. And I listen to a lot of different podcasts. I'll learn from anybody. So an example in my space, Dave Ramsey is like the debt savings guru, right? I don't disagree with anything on that side of it, but at the same time, I strongly disagree with his investment strategy. So, but I'm open minded enough to understand that I don't need to agree with everything, but there are pieces that I can take from everybody I meet that will help improve my situation. So, being open minded, clear, goals, intense focus, hard work, anything's possible. If you're struggling financially, listen, I've been at the bottom. I started at the bottom. You can get out. And if you want help, ask. There are a lot of people who will help you. I find this incredibly frustrating when I see, especially friends of mine who struggle. And, you know, I would be more than happy to show them the path. But if they don't, I can't want it more than they do. Right. So it starts with wanting it yourself, and then committing to it, you know?
Yeah, I think the desire, that passion to have that target in sight, but I think people really need to understand. And you could be working your job. You might never ever be an entrepreneur, but at least if you're listening to this and you don't want to be in business, that's fine.
Mhm.
But just know that any business person knows that you won't be successful unless you have failures.
Mhm.
So in the financial game, you are going to have failures, whether you were a spender like me or whatever. Just recognize that those failures are going to see you through to your success financially so that you can reach your goals wherever you are in life.
Yeah. Listen, I that's a very good point because not everybody is an entrepreneur. Actually, the vast majority are not. And that's okay. This is one of the things that I've struggled with the most as we try to grow our firm is to bring people in who I know that they're never going to give as much to the business as I will. They're not going to do the 16-hour days, 7 days a week or whatever. I get that. Um, but understanding that I was once an employee of somebody as well, but I didn't view it that way. I looked at it as it's a job to do, and if you're willing to do the job, then you should do it at your highest level possible, and you should always be trying to improve. Um, and I think that's where I sort of um, even though I was an employee, I didn't treat it as their business. I treated it as my business. And I think if everybody took that viewpoint, like whatever I'm going to do, I'm going to do it the best I can. I'm going to get better at it. I'm going to work diligently to improve. I'm going to look for opportunities to get better. Um, you quickly become more invaluable to the business. Bigger, stronger piece of the business. And even if you don't want to be, and listen, being an entrepreneur, this, I'm sure. It comes with a whole like. Listen, today I've done accounting, marketing, like just all kinds of stuff that I really don't want to do, but it needs to get done. Um, but that's okay. That's the life I've chosen. If you don't want to do that, that's fine. But whatever you are doing, you should still be doing it at top level.
Yeah, you're talking about the concept of an intrapreneur, right?
Yes.
And I think anybody owes it to themselves to do the very best that they can in their job, because even if you don't, I don't want to say care about the company. I think everybody cares about their boss and their company on some level, but care about yourself to learn the very best that you can out of those skills, out of that situation, so that when you take those skills into the next situation, you're setting yourself up for success
Yes.
and never quitting. I mean, I volunteered on boards and I put as much time and effort into those boards as I do a business
Mm.
because I've committed to it. That's it. That's just my DNA. That's who I am.
Yeah. Yeah, exactly.
So I like to, as we close the podcast, ask the same question to each guest. And I know I prepped you for this, and I'm really interested to see what you have to say. So, Jason, this is the Investing to Win podcast. How do you define success, and what does winning look like for you?
Yeah. So I think I'm going to steal a quote here just to give you an idea into my insight. So I'm a bit of a fan of Grant Cardone, and again, it's I don't take 100% of everything he says, but my favorite quote from him is that success is my duty, my moral obligation. And my mindset is, Garrett, I have 3 young children at home, 5, 4, and 8 months, and, if I've gotta leave the house and come out and do a job, um, I owe it to them and to myself because of the sacrifice of time that I could be with them and doing whatever else, to do whatever I'm going to do at the highest level. And I think that's sort of if I can, at the end of the day, say, "You know what? I it was worth every minute. I did everything I could to make this a successful day, then that's what success is to me. Um, it's not really about money or any other barometer, really, to be honest with you. I mean, we do have, especially in the sales industry, we have a lot of barometers, but it's really a feeling that it was worth the sacrifice to get out of bed and leave the house before anybody else was up and probably be home just in time to put them to bed and hopefully um, make that all worth it. Um, and winning to me is so again, we have a lot of barometers, a lot of measurement tools here. I think that winning is more about being able to look yourself in the mirror, know that you did the right thing, know that you helped as many people as you could, and being able to live with. Sometimes we have to make tough decisions, whether it's to let a staff member go or to not take on a client or, um, but just understanding that you can live with those decisions, that you've done the right thing in those situations, and that you're comfortable with who you are as a human being. Um, I think that's the biggest thing. The biggest goal for me is just to not have regret, not to say I will never have regret, but just to always give 100% and know that I've done everything I can and I've done it for the right reasons.
I love that. It alludes back to your, at the beginning of the podcast, just being driven by bigger purpose.
Yeah.
And I think for anybody listening, I mean, you're going to win if you are following your bigger purpose, right? I mean, that's what you just said, if I could paraphrase that. So thank you for that.
Thank you.
All right. So thanks for coming on the podcast. It's been very insightful. I'll leave your contact information, obviously, in the show notes so people can know how to get hold of Spectra. And thanks for coming on to the podcast. I really enjoyed it today.
Yeah. Thanks, Garrett. You too.
All right. Okay. Take care.